Preparing for the opportunities of this week means so far we've already seen the JOLTS data, and it still holds true that good data is not bullish. In fact, it's flat or bearish. And that continues to remind us that there's still quite a bit of uncertainty around what the Federal Reserve is expected to do on December 18. Now, we're going to get a little bit of clarity tomorrow, because tomorrow, December 4, we've got the ADP non-farm payroll. Yeah, kind of important. ISM services PMI. Yeah, kind of important. But oh yeah, we have some guy named Powell scheduled to speak on a panel at 1:45 tomorrow. Whatever he says during this panel discussion, and you can see here it's at a Deal Book Summit, there are going to be audience questions. So believe me, they're going to be asking about what the plans for the Federal Reserve are for the December 18 meeting. Now, December 18 has been as low a probability for a quarter point rate cut as nearly 50-50. It's been as high as about 79%. And you can see right now, it's sitting at 72%. So 72% expectation for a quarter point rate cut, 27, almost 28% expectation for a hold on the 18th. Now, obviously, we play in probabilities as traders. We don't play in certainties, right? We play probabilities. And the probability for the December 18 is that we'll get that quarter point cut. This is not about, look, when we talk about a quarter point cut, this is not about the discussion of what the Fed should do. This is not a discussion about why this is a good or bad idea. That is all a waste of time conversation. What this is the probability backed by data. And the data that fuels this is a contract called the Fed Fund Futures. The Fed Fund Futures have one reason to exist: to speculate on what the Federal Reserve will do at each of the scheduled meetings. All right, so that means that we have a couple reasons to think that might either increase or decrease in probability. None more so than tomorrow, 1:45 on Wednesday. And then I would say, following that up, Friday, 8:30 a.m. Eastern, we go non-farm payroll. Why is non-farm payroll such a big deal? Because the Federal Reserve has a dual mandate, both the inflation target and employment. So that's why numbers like the JOLTS numbers and non-farm payroll are as important as things like CPI, PCE, and ISM numbers. Or those PMI numbers, I should say. And therefore, yeah, two major hot zones for one of the mandates of the Federal Reserve. If there's a reason for the equity markets to kind of go into wait and see mode, but remain optimistic, and by the way, gang, getting above 60-63 on the futures contracts is a brand new S&P futures high, right? And if you're looking at this through the prism of the SPY, right, that level, we're pretty much there at 604.32, and the very popular SPX, right, that high here is 60.53.58. We made a high of 60.52. We are knocking on the door of all-time highs again, and a lot of that is the expectation that the Federal Reserve will cut on December 18. Again, we'll get much more insight into that come tomorrow and then on Friday. Okay, the next thing is, well, okay, Rog, so where are we going to buy the dip? I've watched enough of your videos. I know what you're going to tell me. Find the trend, buy the dip. And if that's what you're thinking, I've done my job. Find the trend, buy the dip. But which trends? Window dressing means what sectors have outperformed in Q4, and we'll continue to focus on those. So if you want to pause this for a moment and look at this list, in fact, I'll make it a little bit bigger. Pause this for a moment if you'd like. Take a look at that list. That list should be the starting point for looking for stocks that are outperformers in this environment. So I'm going to talk about two very popular sectors, actually three. We'll take a look at three sectors really quickly. First is financials, right? And just because something is in an uptrend doesn't mean that every day is going to be a higher high. It just, not going to be the case. Is it frustrating? Yes, I'm a little frustrated with XLF right now, right? It's pulling back today. And you can see Berkshire, JP Morgan, Visa, MasterCard, Bank of America, Wells, they're all pulling back. It doesn't mean that the trend is done. It's a down day in an overall up market. And yes, while it may stop out the occasional position, I'll continue to persist to look at opportunities to the long side, right? So XLF is still very much a bullish sector. And maybe the next time, the next go round in this, rather than XLF, I might look at JP Morgan or Bank of America for buys. All right, the next sector, relative outperforming and heavily weighted in the broader averages, consumer discretionary. All right, we've got a monster trade right now going on in Amazon, right? This is a very strong green candle led #1 weighted stock in a uptrending sector. So in a lot of ways, Amazon is sort of a proxy for XLY, and XLY would be a reflection of mostly these top 11 names. Tesla, beautiful trend, right? TJ Maxx, Starbucks, these are places to look. I would avoid McDonald's right now. I would avoid Airbnb right now. And Lowe's, probably not near the top of the list. And Nike, I would likely avoid Nike right now as well. Your best trend and highest concentration weighted stock in XLY, if you don't go with the XLY itself, would be Tesla. And we're continuing to take advantage of our dip buy and Amazon as we punch up to higher highs. And yeah, I'll probably look at another opportunity as long as Amazon continues to plot green candles. That brings us to our last sector, communications. This is the land of Meta and Google, right? But that's not really where my attention is. Sure, Meta is finally breaking out and good for it. But please remember, gang, unless you're a momentum player, this was going nowhere for a very long period of time. Netflix is a far better symbol. It's been consistently giving opportunities to buy again and again and again, and it's been moving higher over time. This isn't about one or two nice candles, right? This is about an overall movement to the upside. Disney would be another one to keep an eye on. T-Mobile would be another one. T would be another one, right? Take-Two could be an interesting uptrend breakout scenario, right? It's really compressed in a narrow zone. That could be another one to keep an eye on. Take-Two. Right? Okay, so that's what we've got. I'll dive into the premium video and I'll start giving you all some specific setups that I'm looking at. But this is that broader view. This is the first step of the homework that I do. What direction? What are the catalysts for volatility? Powell, non-farm. What are the stronger sectors? We took a look at 3 of them here in financials, consumer discretionary, and communications. Then we start to dive into the individual setups, the specific zones that we're going to look for. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.